Today on Ask Money Talk, we answer a question we're hearing from property and real estate investors looking for economic insights on Canada's rental markets. Beata Caranci, Chief Economist at TD Bank Group, joins me now to weigh in. Beata, here's the question. What is the outlook for rental markets in Canada for 2026?
Yeah, it's probably not going to be that much different than what we saw last year. And by that, I mean that the renters still have pricing power in this market. There is a lot of supply still out there. What we've seen in the construction market is a tilt to new construction being in the rental build market away from the condo market. And that's because both provincial and federal policies favored creating better financing conditions for renters. So we're getting that supply push, still not completed. And so probably going to still have that market favorable if you're a renter and not if you're on the economic side of the investor side of it.
And tell me what the impact of changing immigration has on that as well.
Yeah, it's big. So, we are going to be, for the first time in history, in a contraction mode with our population. All of that is coming off of these non-permanent residents. And much of that is students. And these are all your typical renters. When you look at non-permanent residents versus someone who's Canadian born, they are 6 times more likely to rent. So that is the portion of the market so you not only still have a supply push happening, but you have the demand side retreating, and that effect is still going to be occurring this year. And so that's the duality of the market and the challenge for investors.
Let me ask too, just from those maybe not renting, but those who are buying and selling real estate then too, what's the outlook there? There's been some interesting moves this year.
Yeah, we are starting to see things unlock a little bit. I'm speaking specifically to Ontario and BC. And the reason I say that is because the rest of the country is fine. This is where the supply is in terms of being in excess. So where we are starting to see some sales, we're looking at sales growth, for example, in Ontario of about 12% this year. Now, that sounds fantastic because it's better than nothing, but it still means that the level of sales will be about 30% below the peak. So it tells you that there's still room to grow or the art of what's possible as we go forward. But that's much better than what we saw last year. From a price perspective, we don't think you're going to get much impact because it's still very much a buyer's market. So we're absorbing slack, not yet at a place where it's going to be a balanced market in Ontario and BC, but it already is in the rest of the country. But if you're in those two provinces, you're still probably going to have to be a little bit bendy on your price.
Beata, thank you.
You're welcome.
If you have a question and you'd like us to answer it, you know what to do. Send it to moneytalk@td.com.